at TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Daryl Martin.
Welcome, folks. We appreciate you growling and prowling with us out here. You have Tom O'Brien and Tom O'Brien. It's a beautiful thing, kicking into the Labor Day weekend.
3-day weekend.
That's right.
Up.
I know, man.
I love it.
You know what's wild, too, is that, to me, for some reason, that Labor Day is like the beginning of a new year. And
yeah.
It just happened to flow that way, like when I was your age.
I was going to say, it comes from, I think, the Northeast where so much changes.
Yeah, it does. Yeah, right. Exactly.
It's the end of the summer.
Exactly.
You're down the Cape, so you move, right?
Exactly. Start to get fresh again.
Yeah.
Right. Market-wise out here, folks, first off, we do welcome you to the Nadex program. If you haven't test drove the Nadex platform yet, folks, you know, we don't have to tell you that there's volatility out here. Great time to test drive it. And great time to not only to test drive it, you know, but, Tom, you were talking about this last weekend, that this is the time that as you trade, they'll put $25,000 of paper money into your account so you can see how these contracts trade, because that's really important in an environment like this, okay?
Sure.
You'll see where those premiums go up and down dramatically.
Right. Because
you know?
it's like an option market where there's premium. Right. Like
exactly.
You can understand how premium adjusts to how the market adjusts.
And it adjusts, man.
Right,
And when I say adjust, folks, it adjusts quickly.
You got 1.5% index moves on like a daily basis, one way and the other. So you can see the full range of the spreads, where the binaries, where you go from a binary that's getting maybe, you know, a 5-to-1 or an 8-to-1, where you're putting up 12 to maybe potentially, you know, make 100.
Yes.
And you can really see how when you get to that strike price, where does the bid go, you know, as to where you can get out, where, because, you know, you get in at 12 on some of those, they're way out of the money, and it moves 100 NASDAQ points, and then you're only at the money, so you're only going to 12 to 50.
Exactly.
So what if you want to get an 80? Where does that have to go on the other side of that binary option, maybe, so you can see where that binary spread ends up?
No doubt. No doubt. And market-wise out here right now, what you have, folks, you get the Dow off 230, Nasdaq's down 41, S&Ps are down 22. We have gold down 490. That's at 1119.50. Silver is down 10 cents at 1460. Bonds, you get the 10 and 30 year up, and King Dollar is up 6 ticks at 96.47. You know, we'll see where this market shakes out, but this is going to be tough for the broad markets to have any traction. Let's go to Tom in Pittsburgh. Hey, Tom, what's going on?
Hey, Tom, how are you?
Doing great, man. You having a good day out there?
Yeah, I'm having a great day. It's Friday, coming into a nice weekend.
I know. How cool is that, right?
Yeah, unfortunately, Tom Brady's going to start against the Steelers.
I know. How cool is that, especially up from Pittsburgh? You know, what did you see? You know what I didn't realize? That the Las Vegas had closed their books. They wouldn't take any bets prior to this.
Oh, okay.
Yeah.
I had seen that for the Super Bowl, they went from a 10-to-1 favorite to a 6-to-1 favorite.
Did they?
So
okay.
It mattered for the.
Yeah, they probably when that happened yesterday, I was looking at the Bloomberg, and the Bloomberg.
Yeah, they probably cut it off when they knew the decision was coming to make sure nobody got that.
No, even before so, they had closed that book because they, you know.
It's too much inside information, probably.
Yeah, seriously, man. So, what are we going to look at?
Well, I had a question on GOLD. It sort of broke below its lows. I was looking at a 10-year chart. What's your opinion on it? It's starting to reject now, but what's your opinion?
Okay, so you get Rheingold Resources. Yeah, I'd take the stop, man. I wouldn't. You do not want Rheingold closing. I see what you're doing. Okay, so this 5706 is crucial, man. You know. It's it's got to close inside that range. Doesn't close inside that range, not good at all. Period.
All right. Should I wait till the end of the day or just?
Yeah, you can wait till the end of the day. You know.
That's the low from July 27th.
It is, and what it is, it gets it into a different range. Like if we pull this back, and this is always dangerous when you drop out of a range. You know what I mean? You can see that, you know, that's the high volume low there, and it already. 58's the high volume low. It's like, okay, man, you're already below that. It's like, okay, what's it going to do? And we know from the past experiences that market-wise, when the markets go south, you know, they've taken those gold stocks with them, man, and this market's going south. you know.
Could I ask one more?
Sure.
FXP. I was in it, and I took a stop yesterday. Had a tight stop.
Let me have F.
Yeah, I believe.
FXP.
XP. Oh, it's ProShares UltraShort China 50.
Yeah.
Okay, well, this one's a tough one because China's closed right now.
I see that high volume spike up there at 58.
Yeah. So let me just, this is the, okay, so the ProShares, the fund seeks investment results that correspond to 200% inverse correlation to the China 50 index. You know, so let's go over and look at China. So China doesn't open up until last Sunday night. And the last time that we were opened, you know, she doesn't have any traction. Yeah, I wouldn't be buying that other one until you see China open, man. You know what I mean? Okay. Not that, what happens is this. I know that's not great information that I'm giving you because it's like, okay, once China opens, this is going to open the next day. But when China's closed for a couple days in a row, man, it just doesn't, there's not enough information out there to trade it, you know?
Okay, gotcha.
Cooking, brother.
All right, thanks.
Have a great one, man. Have a safe one. Let's go to Mike in Dallas. Hey, Mike, what's going on?
Well, how are you doing, Tom? Listen, just a quick question. How do you look at premium, a plus or a minus premium on your spreads that you trade? In other words, when you see a premium, you first look at your spread, you like the time, and then you see, oh, it's $130 plus $136 at premium. What do you think? What is your next thought?
Okay, so this is a great question, folks, because like when Tommy and I started off the show, we talk about the volatility and we talk about the premiums that are inside these spreads, okay? Now, as you're trading them, and, you know, I've been trading them every day, what happens, well, no, that being said, I haven't traded them every day, okay? And this is when I haven't traded them. Let's say that you had the NASDAQ go up and down the 100 points, right? As you're looking at a spread, what has happened, and, you know, intraday, is that they're moving so fast that sometimes what happens is that the premium is too much for what I want to do. And so I back away, Mike, okay?
Okay.
Now, then what happens is this, and this is what's really cool about this, folks, okay? The premium doesn't stay up there all day long. You know, if the market calms down again, all of a sudden the premium comes down. But you got to be on top of that. So, you know, it's
what I look at, Mike. So there's always the premiums are going to be what the market is. In Daryl looks at, you know, the actual statistics of implied volatility, but just in general, the premiums are kind of what the market is implying that they expect is an expected volatility. So they're going to demand a certain premium for a certain expected probability. So when I look at the premiums, I think to myself, what do I think the volatility is compared to kind of what the general consensus of what the market thinks? And that's just generally. And, you know, you can drill that down really thoroughly like Daryl does with actual implied volatility and all those numbers.
Right.
But just in general, I say, okay, you know, what does the market think the volatility is right now? And what do I think the potential volatility is? And then I say, okay, if I think the market's going to be more volatile than maybe the implied volatility, then I want to be the one that's kind of paying the premium for the right, for, you know, to reap the rewards when the market reacts. Whereas if I think it might be a calm day when the market might be pricing in some premium, then I'm more comfortable, you know, making that premium and accumulating it as time. So that's kind of the thought that goes through my head as if I'm ever going to pay a lot of premium, then I better be expecting a really big move. If I'm ever going to, you know, make a lot of premium and take that in at the beginning of a trade, then I'm hoping inevitably right away, or I'm anticipating it's going to be a flat day because that's where I accumulate all of that premium. So that's kind of how I look at those premium numbers on the end of each spread.
Okay. Okay. Well, Tom, thank you very much.
Okay,
Appreciate
man.
it.
Have a great one. Have a safe one.
You too.
You explained that really well, man.
I'm glad.
No,
well,
you do.
I mean, it's just that simple,
listen,
though.
And what happens, folks, is
somebody's paying somebody else premium money. So, you know, if I'm going to pay up, and again, if you're day trading, that premium's going to stay in there. So if you're making 10 to hour-long trades, it's not as important. But, you know, Mike, like Mike said, what's the kind of the first thing you think about? And I keep that in mind, because if you're going to be in the trade and you're going to be the one putting up premium money to hold that option, then you better anticipate that it's going to be a more volatile stock than the market is making you pay that price for.
No, I know. And you know, so the one of the things that I love doing, right? And you know, it doesn't seem that I get it enough because I'm always selling the market, okay? Is that when you sell it and you get like 4 points of premium, even and I'm always doing the NQs, okay?
No, and they can be, and you know, like we go over, you can still be getting that premium and still have a profit potential. You know, you're just not your max profit potential is not that premium. Your max profit potential is that premium plus a market move. You know, plus
that. No,
whatever
exactly. And in this environment, you know, what we have had is that you know, those moves are dramatic, you know. So if you're watching Tiger TV right now, folks, the gold contract, I actually went in the gold market this morning. Now, this is where this gets really intriguing, too, that if you do trade, you know, futures and you want, you know, gold is so volatile, man. Gold could go down $20 or go up $20 in a heartbeat, but realistically right now, your probability is higher that you're going to go down because it's been in such a downdraft, right?
Yeah.
You know, and so this morning, you know, when I get hit, I said, okay, man, I'll take a couple contracts. You know,
trading the 100.1 or the 50.1?
I'm trading the 40.1, 1100 to 1140.
We'll pull it up when you get back.
It was right in the middle. You stay there, folks. Tommy O'Brien, we're going to be right back. Our phone number is 877-927-6648. Dow's down 250, Nasdaq's down 41, S&P's down 23. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We get the Dow off 220, Nasdaq's off 35, S&Ps are down 21. We have gold down 540, silver's down 11 cents. And folks, if you haven't test drove the Nadex platform, you can come over to our website at TFNN. You'll see the banner on the top or on the side. You can hit that banner, bring it up. They'll put $25,000 of paper money into your account. You can see how these option contracts trade. Now, if we go over to the gold contract for a second, you know, when gold got hit this morning, folks, okay, the jobs number come out. Let me show you what I did here. So the jobs number came out, and what you had when the jobs number come out is that we had a nice spike up into the 1133 area. Now you got juice up there, okay? So bottom line is that, you know, the game is wait for a retest on the deal. I waited for a retest. The retest came in with lighter volume. Now what has happened, though, is this, is that you got under the low, right? Let me put this on a one-day for you because I want to show you what I don't like right now. You get under the low and see how there's no traction on the way up? There's zero traction here, folks, okay? And I do these 10-minute bars, okay? So what I'd be looking for is this. First off, what shouldn't have happened is that it shouldn't have went under the 118.30, okay?
That's where you got into it.
That's where, yeah, 119.10, I believe, okay? Yeah. So it's like, okay, man, hold it. You went under that low. Now what has happened since we've been on the air, okay, is that it's tried to get higher. And see these 3 bars? We only did 2,300 contracts. We did 1,900 contracts. And now you're dealing with 1,500, right?
And you're only dealing with till 1:30 in the afternoon, too.
I'm dealing with 1:30. Okay, so I want to show you what we're going to do here.
So this should be more active than...
Not only more active, okay, I'm only down $24. Guess what? We're going to close it. I'm buying those back.
Oh, perfect, man.
You know, there's no...
I agree. It could just trickle off right for the rest of the day.
There's no way.
Everyone could be just like us saying, I don't know what's going to happen. You know, market's dying. There's nothing here. I am going to get out of here.
Guess what? You lose $20. Now it's going to be $18. You're done.
Right.
And it's
I think you're the wrong amount of...
This is sick. Okay, sorry.
You got to sell them now.
Yeah. There we go.
Keeping
Clean
positions, perfect.
Yeah,
totally.
And because that the market was proven there, right? 4 different times it's trying to get higher and it can't get higher. Now you can make the case of, hey, you just took a loss. Like, well, so what? Because and it might go higher. But guess what? I've been doing this long enough. 4 different times going up. That should have got some juice, number one.
Sure. And that wasn't your plan.
Exactly. And it shouldn't have broke that. That's the bigger issue to me is that it really shouldn't have broke it. We'll see where this shakes out the rest of the day. But it's like, hey, man, there's no strength here. And it's like, you know, okay, hey, big deal. You know, yesterday, I had said to Tommy a little bit earlier, yesterday there was a nice little trade out there. And this is, Mike, this is where this comes as the aspect of premiums. What I did, because the premiums were so high, and the Nasdaq yesterday, and this is what's cool, folks. You can just move around the market.
I was just going to go into some of the spreads. We can play them. Go ahead.
What I did is I moved over to gold. Okay, and what ended up happening with gold is it was a $5 out of the money. which is dangerous, folks. Okay, but guess what? I bought 2 contracts. It was $20 a contract, and the upside on that was like $2,200 a contract. It was like insane. And what ended up happening is this: as soon as I got it, gold moved a little. That big deal. It doubled, but that was double shot money. But to make a long story short, if you are trading, whether it's oil, whether it's gold, if you move around a little in these, you can find those good risk rewards.
Yeah, no, there's so many options. There are. I mean, look at what I have the Nadex screen up. We're looking at the Nadex spreads, just in the Nasdaq 100.
Right.
Are you looking at 12 o'clock? Are you looking at 11 o'clock? Do you want a 30-point spread going till 4:15? Or do you look at the daily ones, most of which are going to be 40 points, or the master spread, which is going to be 80 points? Now, this is, you can look right in here. Now, this is talk about premium. This is where you get NASDAQ Nadex. NASDAQ's trading at 41.96, NASDAQ 100. And right here, it's, you're almost 20 points over premium. Of course, that's because you're right near the bottom floor of this.
Right.
41.90 versus 41.98. But this is kind of the cool element where you can see going for the premium in terms of how much you're getting and what you're risking. It's at 41.98. You can sell it at 42.15. And just to show, if you were going to sell one, your max loss is 539, your max profit's 261. So, but you're collecting 16 points of premium in an 80-point spread. That's almost 20% of the entire spread that you clip in premium.
Ooh, let's talk about that.
See what happens at the end of a Friday and a 3-day weekend? Normally, I would say that would be great, but there's a reason why you're collecting a lot of premium, and that's what we were talking about.
No doubt. Tommy O'Brien, we appreciate it. You stay right there, folks. Come right back. Dow's down 210, Nasdaq's off 27, S&P's down 18.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is off 207. You get the Nasdaq down 24. S&Ps are down 18. And you know that the Nasdaq is trying to make it back. It's going to be kind of because yesterday I had been talking about the correlation. It was a whacked out correlation because the S&Ps were up $20, and normally when the S&Ps are up $20, the Nasdaq, the NQ should be up like 50 or 60.
Yeah.
Well, just the opposite is happening today, and you get the S&Ps down 18, and the Nasdaq Qs are only down 26, and it has to do with the IBB.
Yeah.
Because the IBB is getting a little juice, so. We're watching it.
Yeah, no, sometimes there's those small divergences. You see it, right?
It's good to know. It's good to watch it because
they can vary like 0.5% to 1%, right? Where one if they're within that range, they can vary about 1%.
Right.
It's the Nasdaq to the S&P to the Dow. Which one is worse, stronger? Whether one can be flat, one can be up 0.5%, one can be down like 0.2, the other one's up 0.5.
Right.
It happens.
And you can get
not all the time, but
you can learn. You can learn more out of those divergences than even when things are in harmony, which is, it's like, because
you can't learn much when all the markets are up 1% exactly, because then you don't know which one's actually
what's happening. Because like the IBB, when we put that up, that just is testing the other side of it. You can see how much lighter volume. So my probability is that, hey, guess what? The IBB will give it up. And I just said to Tommy, I says, I need about another 45 minutes. I mean, because I'm short the market.
Right.
So I need about another 45 minutes, to basically keep this market at these levels.
No, and that's because as you were saying, it's tough to imagine that people will come in strong late in the day if it's still down like this.
Exactly. And, you have, if we go over to Europe, if we take a look at Europe, Europe's down and gave it back really quick. I mean, because the DAX had been up 2.5% yesterday, just gave back 2.3. That closes in, so an hour from now. The CAT's down 2.5. The FTSE's down. Larry was mentioning the Nikkei, and this is dangerous. So the Nikkei, that was open. That's the only one that was open last night, and it's closed right at its lows.
Yeah.
That's a dangerous.
It's interesting in that normally nothing would happen past like right now probably on today, but almost like anything can happen, which is really cool. It's like
exactly.
Dow was down 250, then it was down 200, now it's down 220.
Right.
I mean, that's 70 points of swing in the last 20 seconds.
Yeah, that's huge. There's no doubt about that. Absolutely huge. Wild. You got no, it's still going. Let's take a look at some of this volume out here. So we have, oh my God. See, this is like, there's no volume.
Yeah.
I mean, we're at 172 million, which is just a mind blower right now in the NYSE. In the NASDAQ, we're at 384 million. If we take a look at the SPYs right now have 55 million. The Qs have 16 million. This is gonna be a tough choice coming into this close today. You know.
Normally, I think you'd take the day off if you had any type of real money, and you can't take the day off because nothing's going to happen. But I can't imagine taking the day off. Right?
I can't take the day off. Right?
No.
I don't want to take the day off.
Any type of manager, anyway.
Right.
Even if they're not going to make a trade, would want to be available and watching what's happening, as opposed to most Fridays before Memorial Day, where you just don't even look at the market past 10 o'clock. And you're fine, no matter what happens. But today, recently, you just can't do that. You just can't stop paying attention at all for
because if it
a couple hours. It could be 400 points, 500 points.
That's right.
Any day.
And if it does bounce, what that would be setting up is that somehow, some way, on Sunday night they'll announce something in China or Europe or something, and this thing can bounce good. Do you know what I'm saying?
Yeah.
Because what you are doing is that if we take a look at the S&Ps for a second. You're coming into the last low that was generated out here, and we haven't hit it yet. But you're coming in with dramatically lighter volume. It's like, okay, man, there's no reason to kind of bounce again. You know what I mean?
Right.
Because what we do get,
there's no reason it can't do anything.
Exactly. Exactly.
So that's like we talk about Darryl. Just trading some momentum and just keeping your stops tight, and that's the same there. There's no reason why you almost can't do anything right now. So keep that in mind, no matter what you think it should do and how right you think you are.
Yeah, that's a fact. Some of the what I do like in the broad market, me being a bear, is how the financials are trading. That's one of the best financials out there, J.P. Morgan, and the reason it's not that it's down a lot. It's only down $1.31, but because it's so far into the bar from the 24th, it's got to get up and away from that bar. And that's a problem, because it's just like when our first caller when he was calling about Rango Resources. For some reason, markets are just like triple deckers. You go to the next floor, well, it hangs on the next floor. Yeah. And it's hard to move
that area
floors.
Of supply and demand, right?
It is, and it's hard to move floors. You can move them. But if you're moving downtown, guess what? You need the juice to break it. If you're moving uptown, you need that juice to go topside.
It really is floors of supply and demand, and that's the market flies with supply and demand.
There's no doubt. There's no doubt. So if we, let's see, you have the NQs up.
Most of these, this is what you're dealing with. You're really playing a huge premium game if you're in any of these because the market's already moved so much. You have the Nasdaq 100 at 4203.
Okay.
And you can see that on most of these, the bottom floor is going to be 4190 versus 4210 versus 4230. So your best shot at the middle of the range for a daily one. Now, you say daily, but if you go into 10 to 12, and what time is it now? So we've got an hour and 15 minutes left. And this is where they're constantly readjusting. But see, even then, there's just such movement where these are all away from the spot. And that's where you talk about you pull up gold, you pull up another spread if you'd like. But I'm not, just like you're saying, we were going over some premium in the NASDAQ ones especially.
Right.
And I'm not okay with giving somebody the option to reap a reward if the market has a big move today. Like, I'm not okay with taking in 15 points of premium to say you're gonna make 55 points if the market reacts today. Because I'd just rather not. I'm not confident enough in that.
There's no doubt. Because on that, what you had with that gold trade I even had, I liked the trade when I had put it on, but I still had a risk of like $450 on that trade. It's like, I'll take 20 bucks
to make like 350, right?
Yeah, 353, exactly. Right, yeah. That's exactly. So it was like, okay, that doesn't fly. It flies if it was acting correctly, but it wasn't acting, the way I wanted it to act.
Especially on a day like today, if it's not happening right now, it's probably not going to be happening.
It's right. Just like I don't think someone's going to be buying the market.
You can see it's done absolutely nothing just to pull it back up since you got out of there.
Right.
Now on the other side, you could. So let's look at if you wanted to try and collect some premium. Let's see what is. You'd be wanting. Yeah, you're not going to really even be able to collect premium buying it because it's already gone down.
Right.
And that's where you need to work on just being able to choose your selective spread. So as we go through this, you can see that we can just pull up 4 different spreads.
Yeah.
And this is where, if you download the demo account, this is exactly what I would be doing. I'm not even sure where the spreads fall and what premium lies where, but this is where you just figure it out. You go in here, you pull up all the spreads, and you see what's happening. So we're at 1120.
Yeah.
Now, I'm just trying to find the most active one. So, yeah, I mean, this is trading pretty close.
It's right at it.
Which is remarkable in that, you know, if you were going to sell it, look at what's going on here. I mean, it's so close, but there's no premium at all into it.
So if you sold, look at that.
I know. Am I looking at that correctly? Right?
I'm trying to figure this out. Okay, because if you sold it, your maximum loss is 73, and maximum profit is 427.
Well, that's because they're allowing you to sell it 8 points off of the high of the spread. So you're selling it at 11.17.
Yeah.
The max of the you can lose is when it expires at 11.25, which is your 73.
Oh yeah, yeah.
But you can reap the reward. No, this still doesn't. I'm not sure. I mean, the market's almost saying that they expect like no movement.
Exactly. Yeah, that's what that is saying. Yeah. Period. Right.
I mean, that's remarkable.
That is remarkable, man.
Yeah.
And those are, you know what's amazing is that the option markets are so efficient. It's unbelievable. Right. And it seems at certain points during the day that's out of whack.
And you have to, you know, we're sitting here and be like, wow, like, I mean, that looks like too good of a deal. Well, that's when you have to go like, whoa, 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 especially on a day like today. Like, hold on, yeah,
exactly.
I'm not going to just go in there and decide to sell it because I have a 5-to-1 risk reward on something. Well, it's like, guess what? The market knows what's going on. There's a market maker on the other side of that trade, you know, giving you that trade.
Yes.
Well, they're not going to give you a gift of $500 to have fun for the weekend. You know, they're not. It's just you have to think that. You know?
You do.
So you have to. I mean, that's.
No, there's no doubt.
Yeah.
Man. It's just amazing, actually. Let's just sort of pop that up just so I can.
Yeah, no, see what's going on in the market. Keep track of everything.
I got a lot of different things happening at the same time.
Can't just focus on gold.
Yeah, totally. So we get the Dow off 223, Nasdaq's off 32, S&P's about down 20, and they're hammering these gold stocks, man.
You know, it'd be interesting to look at if there's that much volatility implied in gold, then maybe the play would be, if gold's going to be that calm for the rest of the day, then the market's probably going to be that calm for the rest of the day.
Well, that's a good point. That it flattens out right where we are.
Interesting. I wonder how, if you're a market maker, that they tie into the volatility they're pricing in an index versus the volatility of some of the commodities that, of course, react in similar ways. But it's just interesting to see how little volatility and premium they were putting on some of those gold spreads.
There's no doubt.
I mean, that's what that basically means is the market maker thinks that it's probably going to expire right where it is.
Right.
So, you know, he's not willing to pay you any premium for a contract because he's not going to pay it because it's never going to go there. The markets, that's what he's saying. It's just important to understand that, you know?
Right. So I got the NQs up here. This is going to get intriguing because they tuck their head up slightly. You know, you're down 32, you know, but they've been as low as 4155, so they're up $40 from there.
It's quite a move.
It's quite a move. And with
This would be interesting, yeah.
No, it is. It's you know, right now.
You watching this like a hawk, maybe to close that if it starts peaking above these and take profits for...
Well, this is going to be a big choice I have, you know, I mean...
Are you contemplating over the weekend? Is that what you're trying to figure out? Yeah,
right. You know, and, you know, I can't be a pig either. You know what I mean? That's the other side of it.
Explain what that means. Is
well,
to being gluttonous and going for it all, or what?
Bulls make money, bears make money, and pigs get slaughtered, you know? So I've been doing pretty good. So it's like, you know what I mean?
Can't get too greedy, right?
Right, you know?
Yeah, for sure.
You know, so
and it's a high-risk play, I would say, no matter what side you're on, no matter what trade you have, no matter what you want, being long or short or active over the 3 days, with China being off, coming back Sunday, us being off, and just the general market can do so much in one day. Who knows? And I keep saying it, but you say who knows what can happen, right? And that's good. It's good and it's bad. It's just you just have to realize that you're open to some high variance, and some big swings, And that's how you make money too. You just want to be aware of it. It's like
exactly. You gotta stay within your.
And that's, as you're saying, it's like if you pulled some serious profits, that might not be the time to press your luck. Because if you keep pressing your luck, and I say that in a good way, you know, eventually it all.
Yeah. That's right. You know, you got to get out of the market, folks.
The market moves both ways.
Bottom line,
it swings in both directions.
If you've done it once, you get it out of the market, you start with a smaller deal again, and you basically do it again. Because what ends up happening, it's only a matter of when the market's going to take it.
Exactly.
It's not if, it's when. You know,
it's a probability game, and you can't just keep leveraging yourself up.
No,
because eventually those losses will come back to you.
Right. Yeah, there's no doubt. Man, this has got to be, going into a long weekend with the Dow down triple digits is a different ball game.
And it's interesting how it hasn't even accelerated, though. We kind of like started down off the jobs numbers. So it's like nothing's really even happened today.
No.
So it will be interesting if it's like, okay, that's, we've oscillated in between 50 Dow points for the entire hour. We're approaching 50 past, and we haven't gone. It's been between 200 and 250 down the entire time.
Right.
And like you said, if it doesn't do anything right now, I don't think it's all of a sudden going to find some life at like 230. Who knows?
No.
But there should be some acceleration right now if people are going to trade on fear or get their positions or.
Right. The way I'm looking at it, by 11:30, quarter of 12, if this market is at the down 234, we can do 300 down. So, what I do like is that those NQs now. You see how they're popping up a little, but now what you have is you have the IBB flat. It was just up $1.30, so it did the test. But now it was just like when we were looking at the gold contract. If that doesn't get any juice on the way down, that's going to be the deal there. It's like, okay, man, what are you going to do? Because that IBB, man, is crazy how it controls the NASDAQ. I mean, it's
technology in a big way. And,
Yeah, huge. Here, I'll give you the strength versus the weakness inside the Dow. You got all the Dow stocks in the negative. The leaders, you got Disney up down 50 cents. Nike's down 82. You got Apple off 82, and you got Boeing down 115. Taking it south. See, now this is the positive for the lower markets. Goldman Sachs is the leader on the way down. That's down 450. J.P. Morgan is next at 144. Microsoft is down 89. American Express is down 150. When those financials, what I've always found, the financials for some reason, they don't fall apart until the market really starts getting going on the way down, and then they fall apart very quickly. This is Tommy O'Brien. Tom O'Brien, we appreciate you growling and prowling with us out here. Our phone number, folks, is 877-927-6648. Dow's down 237. Nasdaq's off 37. S&Ps are down 23. We're going to right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is down 227. You get the Nasdaq off 36. S&Ps are down 21. And don't forget, folks, man, Mr. Basil Chapman is going to be coming up next. Then we get Nico and Paige going to keep you healthy. Man, Mr. Steve Rhodes, I'll be back this afternoon. And when we talk Basil, folks, and we talk volatility, he's got a webinar coming up.
He sure does. Next Thursday.
Next Thursday.
I know. I was talking to him about it. He's excited. Historical context of volatile markets.
Yeah. And, you know,
Basil's done some workshops before in like 1920s, and so he's just going to look back at, whether it's up or down, but some of just, as the market has peaked out and maybe some of that volatility comes in and different periods in time and how markets react and, what you can expect.
Yeah, totally. So, and you can jump on our website at TFNN. It says a subscriber event, folks, but you can test drive his newsletter 30 days.
Get a 30-day free trial. Pay nothing.
Yeah.
Get his newsletter, and you get to go to this and try the newsletter for a month without paying anything.
Next Thursday night.
Yeah. 6 till 7 at night.
6 to 7.
And of course, it'll be archived, so if you can't go live, you just sign up and you can watch it whenever you'd like.
Cool. So, as Tommy was just saying, the markets haven't moved at all since we've been on.
I said the Dow moved. Oh, no, now moved a little bit.
Yeah.
No, I'd say moved like 7 points in the last 10 minutes, and actually just moved 15 points in the last minute. So
okay, yeah. So it's getting near that time. That's what's also going on.
This could be the range we saw from 200 to 250.
Yeah.
I mean, what you have to like is that you're at the bottom of that range that we've been at. We've gone from 250 to 200, back down 250 to end the hour. So.
And the closer that we get to, the Northeast, we especially from us living up the North.
There's already traffic in the Bourne Bridge to go down the Cape.
No way.
I'm not kidding. 11 o'clock, there has to be traffic on the bridge. Probably like miles backed up, right?
You know what's so crazy, folks?
I would make a wager on that. I would make it seriously.
Totally. And you know what's so crazy? Think about it. When we used to go from, our house in Milton or Weston, wherever we were living at that point, down to the Cape, it would take us like an hour and a half, and it's only like, 40 miles, 50 miles?
Yeah.
Okay?
You can make it an hour going to Falmouth when we were doing it with like no traffic.
Right,
and that was,
and that seems so long, and now we're in Florida, like we always go anywhere, like all the time, like nothing.
40, 45 minutes to get here.
I know.
I know. Just flying over the bridge to Tampa.
Isn't that funny how that works?
Is, yeah.
It really is, man. I mean, it's just like, just a different texture.
I was a kid, so I thought it was even longer too. You think an hour is
in
like
the back of the pickup truck.
it's exhilarating.
we had a great. I had an F-150, right? A red F-150.
S10.
S10.
Right?
S10. That's what it was.
S10.
And you get a picture of this: Tommy, Caitlin, and this big German Shepherd.
I know. Back when you can just ride in the back of pickups on highways.
Totally.
Yeah.
Having a blast.
Totally. Little kid.
With the pillows, right?
Yeah.
That's so funny, man. Oh my God. I'm telling you. Pretty wild. So, listen, there's going to be no juice out here.
Yeah.
The real key is going to be is, where does this market close? Because, we're at 200 million on the NYSE. We take a look at the NASDAQ. The NASDAQ is at, NASDAQ.
You know, it's like every time you want to say something, though, the market seems to surprise you. Not even say something, but it's like when whether it's your trading or not, you just have an expectation of how the day can go in your head even.
Oh,
and
yeah.
It's like, man, that is some serious action that you couldn't expect some days. So you just don't know when...
What
I'm really maybe there's big traders waiting to just really
watch this.
Make everybody pay at 2 o'clock. You know, I mean that's
what's so cool is that we haven't had volatility for so long, right? And what happens, folks, is this, and it's terrible, I know, if you're investing, but if you're trading, what ends up happening is that when you have the S&Ps that move $20, okay, you don't have to get $20. You can get 7 or 10 points out of that. And you can go both ways.
Yeah, that's
and you just have to be quick.
For the S&P, that's 0.5%.
I'm
just, so
it's
it's
sick.
Think in percent terms. That's what.
I like it.
Totally.
I like it.
Have a great weekend, man.
Thanks, man. Folks, you stay right there. Man, Mr. Basil Chapman's coming up next. And then, of course, Nico and Paige. Steve Rhodes will be back this afternoon. Have a great weekend, safe weekend. And be safe. No drinking and driving, folks. Get a cab, get a friend. All of the above.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.